Hi, this is Craig, the options linebacker. This is the weekend report for Sunday, October 3rd. Normally I do my weekend report from a top-down perspective. That is, I start with a monthly chart, then move to the weekly chart, then move into the daily chart, and then sometimes even move in to the hourly chart on the S&P. Let's shake things up a little bit by doing it inside out. In other words, I'm going to start with the daily chart, then move up to the weekly chart, and then finally the monthly chart, because there's something important that I have to show you, which makes more sense if we do it in this manner. So this is the daily chart on the S&P, and we've had a change of polarity now to an uptrend since we're putting in higher lows and higher highs now versus what we saw in the spring, which was lower lows and lower highs. And of course, because of that, when we get to the weekly chart, we're seeing the same thing. We're seeing higher lows and higher highs. So we're seeing a change of polarity on the weekly chart after initially seeing lower highs and lower lows as we got into summer. So far on the daily and the weekly charts, we're seeing essentially an uptrend. And that change of polarity really turned around the beginning of July. But now when we see the monthly chart, we don't have that change of polarity yet. We still went from a higher high to a lower low, and we have a lower high in place. That's the definition of a downtrend. So we still have a monthly downtrend. We're still under the influence of this in more ways than one. Not only on a charting perspective, but my sense in reading the news and talking to traders is that they're still under the influence of this enormous downtrend that we saw 2 years ago, almost exactly. Everybody's afraid that just when things start to look like they're going to climb out of the basement, that we're going to get one of these terrible weeks again that's going to double dip us down to S&P 600. Let's see the chart and what the chart is showing us. Now, what we do have is from a lower low, we do have an intermediate high. That is a lower high so far, but we do have, look at this, a higher low. And we can have a change of polarity on the monthly chart if the S&P is able to climb up and above, climb above this 1220 area. So right now the S&P has about 75 points of work to do to the upside to be able to climb above there and then form this higher high, which is show a change of polarity back to an uptrend on the monthly chart. Now these things don't happen overnight. It takes a lot of work, as you can see, to not only put in that high, the higher low, and then the higher high. These days I think it's so important to keep this structure in mind right now because it's so easy to get caught up in the news. It's so easy to get bearish when everybody else is bearish. It's so easy to get bullish when all the media is bullish on this. And what we've seen over the last couple of years is whenever we see those extremes in sentiment, usually either the rug gets pulled out, or as we saw in the month of September, we've had an enormous short covering rally to the tune of almost 11%. The volatility is not going away anytime soon, so you have to stay diligent and watch what the charts are doing and tune out all the noise. But the bottom line here for me is that in the shorter term, such as the daily and the weekly charts, we look to have turned the trend into an uptrend for now, and the bulls appear to have the ball. But what we have to be very careful of is not falling into that trap. The bulls still have a lot of work to do to make the remaining bears cover their shorts and get those prices above S&P 1220. Otherwise, what we'll see is we'll see a perhaps devastating lower high setup here, and that would be potentially leading us into that double dip. So we've got to get up and above that 1220. Otherwise, that's a lower high, and then the prevalent longer-term downtrend will kick into gear again, and we'll see at least a bottom test of that 1010 area, if not lower prices below there, such as around 940 or 870. Now let's zoom into the daily chart and see where the battle lines are currently. You can see that these two vertical lines represent the October expiration date as well as November. So our only October position right now is this butterfly that we put on a few weeks ago with the intent of trying to catch the price inside the butterfly as we get near expiration. That's where it peaks in terms of profit and provides us with this nice looking P&L shape. So if the price continues to kind of grind higher up into expiration week in a couple of weeks, that is where I'll take this price off for a nice little profit. Now we've already added our November condor positions, which are up here at S&P around 1250 and down here at S&P 1020. And what you'll notice about those are that we've placed them well above prior resistance and well below prior support. This is the way I always try to stack the edges in my favor, by getting these trades beyond resistance for the call spreads and below support for the put spreads. This is why this trading is not gambling. What we're doing is using the odds in our favor. We're legally allowed to have an edge, and my edge in this case is not only selling a depreciating asset, which is a short option, but also being able to use lines of defense in my favor to be able to help protect these trades. Now, the one thing that I see people do, whether or not they're a swing trader or a day trader or an option trader, is they become a one-trick pony. So they try one strategy, and regardless of what the market is doing, they keep pounding it and pounding it and pounding it. And what you find is that if the market happens to match your strategy, then you do well. If it doesn't, then you don't do very well, and you keep trying until it does. Well, over time, that's not a successful strategy. Ever since the market really started moving like crazy 3 years ago, what we've also added is some swing trade strategies, and currently this is one of them that we have in play. We went long on the SSO down in this area when we had a pullback to support, and we're currently holding a full position there. We're looking to take off half the position when it pops up to the Bollinger Bands, and our stop is currently rising up. The stop is the 21 period exponential moving average, and right now it's covering the position. So in other words, unless we get a big gap down, we should be able to, at the very least, break even on this position. And that's a nice place to be in, where you don't have to worry about turning a winner into a loser, taking partial profits and protecting the trade. Now, we're leading into what can be some of the busiest times of the year in terms of trading. It's usually the heaviest volume comes in near this part of the year, so make sure you have all of your guns loaded. So with that, have a great weekend, folks, and we'll catch you next weekend. Take care.